first of all, I don't expect that somebody is sitting there trying to figure out, oh, do I launch a network that is also going to be a market for zero knowledge proofs, or do I launch a meme coin? Right? What you're more likely to get as the meme coin builders are the people who are going to be wondering, oh, do I make up a roadmap and launch an NFT collection that I'm going to have to go out and make pretend partnerships with, or do I just launch a meme coin? Both are going to have the same probability of success. One of them requires significantly less work.
Oh, I see. So
That's
you
that's
have
why
kind of,
that's why I mean that the unserious builders are likely to just go for the full degenerates.
and we are back on our very regular programming. Keeping everyone on their toes. Sometimes we sort of like trend a little bit more towards consistency, and then we, rug everyone immediately.
Yeah, we should call this the random encounter podcast, because it's pretty much what it is.
Yeah, and it's not even there's like no, there's no logic related to this. It's like not based on whether there's big news. It's not. It's
Well,
just like, could we be bothered to get on a
there's no
meet?
external logic. Come on, there's the logic of, I don't know. One of us got sick. One of us was on a plane. Both of us were on a plane.
Well, sure, yeah. Like, there's sort of practical logistics, but I'm saying like even like if it seems like there is logic from an external perspective, I assure you there is not, and I suspect even any kind of internal logic is actually lacking, and it's just sort of like it feels like there might be some, but it's like it's good to keep up this mythology. Um, you were wait, you were in Japan, right? For that was the reason. No,
I think that was the reason for a couple of weeks. I was in Japan, and then you were in Greece.
right? Yeah. I was in ZK Summit and ZK all right. Um,
Yeah,
cool.
and strictly speaking, I had returned by the day that we had the recording schedule, but I had returned like at 3 in the morning, so I would not have been exceedingly useful.
Well, yeah, and as I recall, there was one scheduled time we had where I just couldn't be bothered.
There was something like, none of fun stuff. Yeah.
Yeah, well, yeah, and then there wasn't, we didn't really know what we were going to talk about. Um, and now, so in terms of knowing what we're talking about, we wrote down like 4 bullet points each, or 1 to 3 words. So like, that's
Which
what we
where we
mean when
usually
we.
get to like one and a half of them, and then just end up on a completely random tangent.
Yeah, exactly. Um, Well, it's been an interesting, I don't know, month or so since we last recorded. I don't know. Um, so I think what we probably want to touch on the markets. Um, these points in the markets are, I find, always somehow like the most interesting from a lot of different perspectives, and so we should talk about that. We don't need to talk about that yet, but we'll dig into that in a little bit. Um, Maybe we could start with the brouhaha regarding Solana that's been going on recently. I have to be honest, I haven't looked into it very much. Like I saw people tweeting about it. I haven't like I heard from some colleagues that they were unable to use Jupiter, stuff like that. Um, but I don't really know what the underlying technical issue is. Is it just like too much spam, or like what's going on? Because there's a lot of failed transactions, right?
It seems basically spam, frankly. And again, the bulk of this happened when I was in Japan, where I tried to be mostly offline. I mostly failed, but I wasn't nearly as online as I usually am. Uh, at some point on a hackathon, I can't recall which one it was, but someone came up with this thing called or supply, which is a dumb
Is that the
fuck
source of
idea.
the spam?
Yeah, this is one of the sources of the spam, which is basically people doing proof of work stuff and sending the results to Solana to mine some things. And apparently from the few things that I saw, this was like the core client was quite frequently sending stuff. The core developer reduced the transaction rate that they were sending at some point, because the spam was just bringing the network down. And these were completely useless transactions, right? It's not me sending you money. It's just me logging a result of I hashed this thing. And last thing that I read was that last week they had been,
Wait.
like the core devs shut it down.
Wait, the core devs of War Supply or the core devs of Solana? Let's make that clear.
Core dev or supply.
Uh-huh.
This is not, I mean, this is just people trying to
So
write
give
to the
me-
chain. You can't stop that.
Yeah. So just explain this to me. So you're allowed via or supply or were to expend compute resources to get meaningless tokens.
Are you new here?
Surely
Yeah.
the token had like something, like some utility, some functionality, some plan.
Things are valued. Nope. And it's actually related to one of the topics that I want to touch on later,
So
which is
essentially it's like
seeing...
compute for meme coins.
Yes,
without the memes.
pretty much. Yes. Well, the meme is that it's bringing proof of work to Solana.
All right.
That's pretty much it. Now, this is related to one thing that I wanted to talk about later, which is the increasing level of degeneracy that I'm seeing. And I think this is definitely part of that, but we can get to that.
Let's leave that for the markets discussion because I think it's very related.
Okay.
But so back on that point, so the this and I guess maybe some other things created a whole bunch of spam. What was the problem though? So theoretically, right, local fee markets should isolate transactions in a way which would allow them like most of the chain to remain functional.
That is true. That is true only up to a point. The local fee markets help you only when the local fee markets help a validator when choosing what needs to be written to a particular piece of locked chain real estate. That's it. But what this was creating was that it was creating, this is basically a whole bunch of randos downloading something that then starts spamming validators with transactions. Validators have a limited amount of compute. They have a limited number of connections. So this was basically resulting on validators getting overwhelmed with these transactions that they still have to filter through.
But
Now,
don't they have that stake?
that
Sorry, the
takeaway quality of service.
yes, that.
As far as I know, that is not necessarily fully functional yet, and I don't know if everything has been implemented, and I don't know. From what I understand, this is going to become fully in effect ideally like in a couple of months. So it's not there yet, and it's unclear how much it will work. And even so, at that point, anyone doing this could still choose to send those transactions through Jito or a stake connection or something else. That will reduce the spam, but they can still get in.
Yeah, of course. But Jito can potentially, yeah. Interesting. So what I wanted to get to regarding this is like, do you think this is fundamentally an issue of the transaction fees being too low?
No, it doesn't really matter what the transaction fee were. I think in this case, it matters.
Well, I mean, the whole point of the transaction fee is to be a spam filter. If it's so low that it's not functioning as a spam filter, then.
But what that would, when you get into high enough levels of degeneracy, like I think we're seeing, basically people are willing to take, suppose that the transaction fee right now is like what, half a cent, let's say, the basic transaction fee, right? Suppose that instead of being half a cent, it were $1. The only thing that this stops is the people who think that whatever dumb meme coin they're doing this thing for is never going to be worth more than $1. All the people who are degenerate enough to think that this thing is going to have more than that value are still going to be willing to spam the network. So I don't think this is something that you can just pick out a magic transaction cost out of a hat and then go for it. And again, end of the day, you could still just be sending transactions to the RPC nodes just to see. So
yeah, so I don't think you can really completely write off transaction fees. Like, yes, more degeneracy. Like, so there is a dynamic in especially bull markets where legitimate use cases are more sensitive to costs than degenerate use cases, and then because of that, degenerate use cases tend to kind of dominate because they're the only ones willing to pay exorbitant fees and try to
yeah.
outcompete each other. So this is a problem. But I do think it also matters. It's not the only element that matters, but it is one. And I was thinking about this because with dank sharding now live in Ethereum, the L2 transaction fees have dropped quite considerably. And I wonder if they will, I mean, they then immediately had blob subscriptions and so on. So, like, it is what it is, right?
Of course they did.
Yeah. Like, if you, I wish there was, maybe I should start a prediction market for this or something, because there is like a very, like, you can always bet on the first use cases for some new technology being some complete nonsense. Like, it's gonna be people just dumping noise into the system. Like, you build this elegant new thing, trying to help the world democratize access to whatever, blah blah blah. And then what happens? People start shoving in like pixel pictures, and that's just kind of how it goes. Arguably, the internet was the same way, right? But I do wonder if Ethereum L2s will start facing similar issues. So blob scriptures is kind of on the L1 level, but just transaction fees getting low enough may cause it. And then the other sort of related topic, which is interesting to consider, is that because L2s are isolated environments, they don't actually affect performance on L1 directly. And so there's kind of a benefit in this isolation. And it seems like both Solana and Ethereum are converging towards ultimately kind of similar structures, at least in this sense, where you want to isolate behavior into these sub sectors of the network, so the network collectively can continue running when things aren't touching each other. It's just quite different. Solana is trying to kind of do it on is trying to do it on like a smart contract level, and then Ethereum is kind of trying to do it more on a network level. I'm talking about local fee markets and comparing those to kind of like separating L2s and L1.
It's not exactly smart contract on Solana. It's accounts.
Yeah. I'm simplifying, but yes. But so it's just interesting to observe that like there are these dynamics which generally are not talked about very much, because everyone is concerned with how much security does something provide over the other, or how much performance, or how much cost. But like it's possible that once we realize the dream of like incredibly low cost and abundant compute on chain, that is just going to fill up with porn immediately.
I okay. Well, I could make a lot of comments on the porn side, because I think that porns tend to be more of an early adopter when you can, because people tend to be willing to pay for it. That's why there's subscription sites. But anyway, okay. So if you look at this from purely an abstract system design, let's say, if you talk about something like Gabulot, right? You could say if you start increasing the minimum fee, then this is likely to reduce spam. And on something like Evolut, you get to design it, or you get to choose to design it for certain workloads where that fee might make sense. On
Well,
something like Solana, I'm sorry.
Just to mention there, so on Gevilot, I don't think this problem exists in the same way, because you can't do anything.
Well,
the blockchain, you can spam the network with transactions, but like they're just regular transactions. Like and so we can set the fee quite easily on a level where that doesn't really make sense.
sure,
Like it's very difficult to create this kind of you can't do or supply on Gevilot, essentially, is what I'm talking about.
Okay, yeah, that I would agree with. But we had discussed some possible attacks at some point of you could just spam meaningless workloads at relatively low fees. So there's a fee design there going on. Now, what I was meaning to say is that on something like Solana, where what you actually wanted to do, what they have stated repeatedly, the founders, is that they want this to be basically the underlying system for fast transactions at any scale. Then if you actually want any scale, including small, you are going to have to keep fees low. So increasing fees is something that would basically go against your fundamental desire, your fundamental goal for the network.
But arguably, or supply is legitimate increase in scale, right?
Oh, certainly. I don't disagree. I think it's a dumb
In
book
the
idea. Yeah,
same way that blobscriptions is a legitimate increase in scale.
certainly. It now arguably is not the. It is not the. If they design Solana wanting it to be basically an operational layer for financial transactions, then using Solana purely to record the results of these things is not necessarily what they wanted it to be. But the street finds its uses for things. So what you gonna do?
Well, exactly. Well, this is kind of the thing. Like, you go generic, then you got to be ready for whatever that means.
Yeah. I guess the message here is that unlike other situations, this does not seem to have been caused by a Solana bug. This is just a massive demand on transaction messaging, effectively, which was the thing that was bogging down the validators, the amount of messages, just because of this thing.
There is an easy solution to that, by the way: increased bandwidth requirements.
Yeah. Okay, let's. I'm not gonna armchair quarterback this thing.
I'm willing to bet that within 5 years we see some network with bandwidth requirements for validator nodes in excess of 10 gigabytes.
I don't think it's just that, for what it's worth. As
There's
a
also
validator,
like and stuff, but
what I mean is this is going to have a factor. But as a validator, if you are building blocks and and again, we might not. I don't think we had discussed this in the past, but apparently the Solana scheduler is still a little bit peculiar. It's eccentric. Let's call it that way. It's eccentric. So it's not necessarily the most efficient at picking which transaction is going to which thread. So currently, as a validator, even assuming that you could get all the transactions that are being sent at once, you can just receive them on your machine at once. You're still going to have a limited amount of compute to sort through this massive amount of transactions and pick the ones that you're going to be wanting to create a block with on their, I don't know what it is that they have, like 300 milliseconds or something to generate a block, because every slot is 400 something milliseconds. So you are going to have more stuff to sift through, and this is going to impose a load anyway. Even if you have like magical inexhaustible bandwidth.
more compute then.
Yes, and I assure you that basically the amount of transaction spam expands to fill all the available space.
Exactly. Anyway, moving on. So, well, actually, one sort of final question on that front. Like, do you see this impacting Solana's long-term roadmap / narrative?
Narrative, I don't think so. I mean, for roadmap, I would expect that they would first wait and see how the stateway quality of service works out. I don't think that stateway QoS is going to be the be-all end-all, but and it is going to require some changes on how people interact with the network as a whole, but we'll see.
Well, it will create kind of an incentive for validators who are staked to do filtering at the edge if they're getting spammed, right? And that moves it off network, which is helpful for network performance.
Actually, I would expect that this is something that is likely to happen at something like the Jito level. You're going to have not only right now you have like the bundle creators, you're probably going to have some filters working there as well. Like heavy duty transaction filtering.
Well, that's a good segue. You wanted to talk about Jito and why Jito will dominate all of staking on Solana.
Yeah, kill all the things. I think you and I chatted about this briefly, but it is a good segue. So, okay, let's suppose that stateway quality of service ends up working, right? Like it's 2 months from now, it's actually working. And for those who are not familiar with what that is, the plan is that validators are going to be reserving a percentage of their connections, of their incoming connections. I think it's meant to be either 80 or 90%, but let's suppose that it's 80%, for nodes with stake, not just for RPC nodes. Another step back. If you don't know what happens when you send a transaction to the network, what happens is that you send it to an RPC node, and the RPC node sends it to whomever is supposed to be writing a block right now for it to be processed. Now, what happens in this stateway quality of service approach is that if the RPC node that you're sending it to does not have stake, then it is going to be limited to the percentage of connections, say 20%, that are reserved for the unwashed masses that are trying to send transactions.
The proletariat.
Exactly. Now, the bourgeois pigs are going to get the other 80%, and they're going to get it divided by a percentage around how much stake those nodes have assigned. So this means that this is in order to reduce spam. The logic behind this is that if you have stake, the more stake you have, the more trustworthy you are on the network, and the less likely to be, providing services as a forwarder for hire for somebody that's sending crap. So suppose that we have two types of users on the network, I would say, like grossly speaking. We have the casual users who just want to send someone money or interact with a dApp or something, but they're willing to wait for this thing to happen or to do it at a certain fee. If I want to send you $10, I'm probably not in a huge rush for those $10 to get to you. It can take a couple of seconds. We're fine. And then you're going to have the people who actually want to take actions that they want to happen right now, the time-sensitive stuff. The people doing liquidations, the people doing arbitrage, the people doing transactions at scale, which also tend to be pricey transactions. Now, if we just take the stateway quality of service approach, then basically you're going to need to send your transactions through a node with stake. This is going to have a cost that is likely higher, the cost of your average RPC provider, right? Even if you send it, you're going to need to add some transaction fee, some priority fee to it in case somebody else is trying to touch the same real estate, which they likely are, again, because you're one of those users who are competitive. So now you have two major factors of uncertainty and cost. You have is my transaction actually going to get to the validator? Because you don't necessarily control how much stake it's being sent through. You have am I giving a high enough fee for this thing? And on top of that, you're going to need to hire some service, like Helios, for instance, provides the service for stake connections in order to have them send your transactions through instead of just using any random RPC node that you created yourself. You have all that uncertainty, and on top of that, by the time that the transaction gets to the to the validator, it may fail. Now, if it fails, the validator is not going to bother simulating it because this is going to double their compute cost. Why would they simulate everything? They're just going to run the transaction. If it fails, you're shit out of luck, you lost your fee, and you did not get to execute the transaction. So you have all that uncertainty, all that added cost, and I think that Helios is charging right now $3,500 a month for the actually, the stake connections start at $3,500 a month, and they have a queue because you're limited by the number of validators out there, right? So this is one way in which you can do all these things. On the other hand, you could just send your transaction to Jito and give Jito a tip, right? And the advantage that the Jito approach has is that, well, first of all, you know that it's going to be pretty much act as a stake connection because it is if a block is created, so you have certainty that it's likely to get there, or you increase the certainty that it's likely to get there. And second, the way the Jito works is that the tip only gets paid if the transaction actually succeeds and ends on a block. So Jito nodes are supposed to simulate the transactions before including them and only include the successful ones. So you are paying for the certainty that if you're paying the fees because your transactions succeeded the way that you were expecting it. And on top of that, you get to do this on a piecemeal basis. You need to go through all this contracts and agreements of getting a stake connection that who knows how you're going to be limited on transactions per second, all this stuff. It absolutely seems like a no-brainer for me as somebody who would be sending a massive number of transactions. So that we just dominate the transaction sending. This means that Jito is a lot more likely to be getting money for the validators that are working with them, which is more likely to increase the APY, which is more likely to be attracting stake to those validators. I know, it just seems to me like basically they have that beautiful flywheel even once stake-way quality of service comes out.
Right. And so I do agree with that in terms of the current products that are out there, but I don't see any reason why other people can like provide the same service quality to users.
They could in theory, but the fact is that stake on the network is every revolver's good. You could make a really good MEV engine, let's say, but in order to get those.
But do you need to? Because you could, like Helios could just basically simulate the transactions and send them to validators, right? Achieve the same thing.
Helios does simulate the transactions and send them to validators, but once the validator gets it and decides to include it, the transaction might no longer be valid.
Right, but if the validator is taking a block from Jito, can the validator just enforce a
Yes,
specific
in theory.
transaction inclusion?
So yes, Helios could create a Jito-like service. Now,
But you can also do that
suppose
on the validator level, is my point. Like Jito kind of comes in from one level below, but the validator, if the validators are all using some kind of system, they can enforce certain transaction inclusion ultimately. It might be annoying for them, and they might lose out on some money from Jito, and so maybe that's the argument why they wouldn't do it. But like in order for them to maintain control over transaction inclusion, they could do that.
That's what I meant by stake being available is good. If I have a validator with good stake, and I'm making money with Jito, I am not generating blocks for someone else. I am only going to have partnerships with one of these people probably, unless that service is not giving me enough business, right? And Jito has a significant head start on this.
Yeah, but I think there is an argument to be made. So I think you're right, for what it's worth. And I think it will be very hard to compete with Jito, just as it's hard to compete with Flashbots on the Ethereum side. I think it is necessary though. Like at some point, new players must emerge for that. If all blocks are essentially coming through a single service, then this is an issue.
I agree that it is a huge centralization risk. And it is one of the reasons why I would have liked Marinade to wake the hell up a couple of years ago, and why I kept telling them that this was the final boss.
So I think the argument is that it's theoretically okay because they don't have explicit control, right? But they might have sort of in practice control over at least most transaction inclusions. So like I would imagine that ends up very web 2 looking, because it's not an on-chain thing. There's not that much control you can exercise over it unless all the validators coordinate, which is tricky.
But
And so you
there is
probably end up with like 2 or 3 big organizations that do that, broadly speaking.
I understand that there is a bundle generator. There is bundle generator competition on Jito. I haven't looked into that side that much yet since I'm not doing it. But basically, you could pick different bundles to generate. They're all going to be going through Jito, and in theory, Jito could choose not to accept one of these packages. Definitely. So I absolutely agree. It's a huge centralization risk. It
But very
is.
intelligent for Jito, just like, why would Lido self-regulate, like
Yeah.
makes sense. Yeah, it is like, I think there's this interesting trend right now, where you have these, like, we've kind of worked out these abstractions in blockchain that allow us to have some things done in a very centralized looking way without sacrificing all of the core decentralization of the network itself. And I think it's clever, like the way that these are being done. But I do think it is somewhat concerning as well, because as I said, even if it's not explicit control, there's a lot of sort of like soft power that will build in these organizations. And the counter to this sort of dynamic, is actually likely making those services decentralized as well, right? And which is what the shared sequencer guys are trying to do, like Espresso, what Jito seemingly wants to do, although they haven't yet explained at all how. And what is also what Gevulot is doing.
Well, which part of Jito? Because the only thing that I understand they have spoken about decentralizing is the stake net side of things, which is only stake assignment.
Yeah, but I mean, like, it makes sense. Like, the Flashbots is kind of like leading the way here and thinking about like what does a decentralized block builder network look like, right? That is going to, I think that'll be very difficult to pull off. But yeah, that is kind of the solution, is like you have this centralization of soft power. It doesn't like immediately threaten the higher abstraction layers, but it is sort of like a long-term threat. And so if you can decentralize that portion of the stack as well, you can kind of, you probably don't end up like, there's no silver bullet at any point. I suspect this is kind of like cybersecurity, where it's just like an endless race.
Yeah.
Where you just like, you get another layer that starts to form centralized power, and then you need to try to decentralize that. But it is an interesting dynamic all the same. Okay, moving on to kick off our markets discussion. I have one interesting thing, which is that I've only seen like some of the people tweeting about this. I don't know the exact details, but I think it's very interesting. There seems to be some proposals in the US to cap USD stablecoin supply per organization. I think it was even maybe required that they're a bank or something like that, at 10 billion. And my so I mean, you can imagine who this affects and how much.
Yeah.
I have a pet theory. I think it's probably not correct, but like, I really enjoy it. And my theory is that there was a meeting and some people were like, fuck, this like circle thing is just it's really big and like we need it. So let's get like consensus on passing this like insane restriction on circulating supply, basically crush their business. But before it actually ever gets going anywhere, we buy Circle at a massive discount and then we increase the caps.
Okay, so isn't last I heard Circle was in talks to for an IPO, wasn't it?
Yeah, I think this puts some
And to throw a little bit of a wet blanket on
wrenches.
it.
Yeah.
I don't know. I honestly I haven't seen this news. I don't understand the rationale. It seems to be this like we are once again becoming the de facto currency of a world economy. Let's shoot ourselves off in the foot again. Let's kneecap ourselves. It seems absolutely stupid.
But I mean, if I was a bank, I would 100% be arguing for this.
Okay, yeah. If you were a bank, you would be arguing for this right now, I guess.
Yes.
I would agree with that.
And but I would want to have some viable paths to actually like not having constraints if I win that game, right?
Well, that
So like
seems
this
easy
10
enough.
10 billion circulating supply constraint is like ridiculous, right? Like um so like I would need to have a path of like how that actually never happens, or at some point they just get raised a lot or whatever.
That's easy. First of all, you can always repeal the restriction later through some reconsidering, or you must be this old to right. You must be an institution that's at least 20 years old or something of the sort. Therefore, all the banks qualify, but Circle doesn't.
Yeah, I think there was some requirement that you need to be like a federal depository or whatever, something like that. It's
But isn't
it's like you're
Circle
you're
already?
either in the club or you're not in the club. And who gets to
No.
choose? Are you in the club? The people in the club.
But I thought Circle was already depositing into the Federal Reserve.
Through a bank
Okay, so they have a bank.
or
Yeah,
through
okay,
BlackRock. I don't remember which one, but yeah, not
okay.
themselves. Anyway, as I said, I haven't looked into this too much, but this is very much the kind of shenanigans I've come to expect from the US.
Well, I think I sent you the link because I missed it when Arthur Hayes first published his write-up on Athena. This is going to give that sort of project a significant boost. It just basically proves their thesis. And it is going to be a massive tailwind for Tether, which
Yeah.
is
Who wins the
already
most? So if you didn't think Tether's revenue by employee was high enough, it soon will be.
no, it's going
I
to
don't
get
remember
easier.
how much their revenue per employee was, but it was some like ludicrous. It was like 3 billion per employee or something.
I remember reading about it on the same Arthur Hayes article.
Yeah.
But yeah, something like Athena, which it's worth looking into if anybody's looking into this and you haven't, is basically
Profit is more than 30 million USD per employee.
nice.
It's pretty good. It's pretty good.
Yeah, that's a pretty nice number.
And then no doubt you pay the employees trash.
Mm,
No, they probably pay them quite well.
yeah.
Um,
I mean, they probably know where all the bodies are buried.
yeah, they probably buried most of the bodies.
That's my point. You want to keep those people quiet and happy.
Yeah. Well, I mean, that's enough money to keep people happy. You can comfortably pay performance bonuses to all employees of 10 million plus a year.
Travel bonuses.
Yeah. It's okay. Yeah, I hear you have this travel stipend. You could spend about 140,000 every day. Anyways, one thing, like, not to say that the US is anyway like exceptional in this, but I do find that in the US there is more trickery by the people in power to try to acquire more power than in many other places, or at least it's more obvious. I don't know. Um, or it's just there's just more power centralization in the US than there is in Europe. Like in Europe, it's sort of like, you've got some politician and he like, does some corrupt deals and he gets like 1 million or something. And, it doesn't like even break the news barrier.
Yeah, I think there's just more shamelessness, basically, and I one somebody was telling me this way back when the whole Volkswagen emissions scandal happened. Someone was telling me, someone who was in the auto industry for a bit was telling me that this thing was common knowledge, like everybody absolutely knows about it, and it's not just that it is.
I mean, the insider trading is common knowledge. And
Yeah, but it's not just that. It's not just that it's an issue of corruption, but this, like, somebody gets paid to keep this quiet, which was a thing that I hadn't thought about. Basically, there was a factor of almost you don't talk about these things because it it would embarrass the German auto industry, effectively. So basically, at the point that this thing exploded and they did something about it was because they could no longer pretend it wasn't going on, right? And I suspect I'm not entirely. I luckily haven't had to deal that much with European governments, uh, but I wonder if there's something. If that's more of what happens in the European side, like they're better at keeping things quiet and at pretending that nothing's going on. Whereas in the US, it's just English. It's just
there's
completely shameless and obvious because it's so ravenous that fuck it.
like, yeah, maybe it is like, maybe it's like an age thing, you know? Like the Europeans have matured into this like
No, no,
this like stately manner where like let's keep things polite, everything's fine, like let's not, cause a ruckus. We Yeah, it's like a lot of the German rich, they're like, they don't make a big deal, I'm gonna have, a massive mansion, but you're not gonna see it because it's gonna be kind of out of the way, and
Yeah,
um,
and I
stuff
think
like
it's
that.
just more about just pretending that everything's normal, not about. It's not that they're not ravenous because clearly there's a whole host of stuff. The numbers that come out sometimes just make your jaw drop. It's just that they're betting at keeping stuff under wraps. I don't know. Maybe they're less. Maybe this institutions are less obviously backstabby than in the US. Maybe there's more. Maybe there's more collaboration in between corrupt people and less competition. I don't know.
Or corruption is just more like institutionalized. Like it's,
It's
we've
it, it's
been
it's
corrupt
sustainable
for
corruption.
1,000 years. We know how this is done.
It's sustainable corruption. You don't want
Right,
to
right.
extract too much value. You want to let
Yeah.
the resources replenish themselves so you can get more.
Yeah, yeah. Like you remember that time in the, 1500s when we tried to, raise the taxes too much and all the peasants revolted. Like we know what happens. We need to stay within these boundaries.
Yeah, like look, man, they're still giving a shit for taking over the Templars' money. We should like keep stuff quiet.
Yeah, yeah. Okay. So let's get on to the markets, which is the main topic of this call. So big changes in the markets, not up only anymore. First of all, what do you think is going on? By the way, we are obviously just speculating about like the general dynamics of the markets. We're not suggesting anyone buy or sell or do anything in general. I think everyone should just sit at home and not do stuff, to be safe. Uh, but what do you think is happening now, and like where do you see things going in the next 6 to 8 months maybe?
Okay, if we're talking 6 to 12 months, I'm not talking price at all.
I
But
said 6 to 8. 12 is a bit long to predict, but we can go 12 as well.
still, I mean, here's the thing: the way that the world is going, it's perfectly possible that by the end of this call, China sinks a Taiwanese ship that has a couple US observers in it, and everything goes to fuck. So who the hell knows? Let's assume that no major. Let's talk assuming that no major catastrophes like that end up coming about. Look, as for what's going on right now, and for context, we are recording this on April 18, which is, I think, 48 hours away from the Bitcoin halving or something.
Yeah.
Look, man, this is not the first time we see this thing happening near an all-time high, when people basically see us make an all-time high, retreat a little bit, and then they assume, okay, it's going to be up only. I'm going to long this thing 50x, 20x, 100x, whatever it is, and then they start getting freaking wiped. I am not sure if this is what's going on the markets at large, but I can tell you that the last 3 days, I've been keeping track of how things are going on Drift, which is this DEX on Solana. And Drift, for what it's worth, doesn't allow like 100x on perps. I think that the two largest markets are Bitcoin and Ethereum. The two markets with the larger multiple are Bitcoin and Ethereum, which are 20x. And then Sol has 10x, and a bunch of others are the more volatile, have a lot less. And on moves that I'm talking about, a little nothing of them or move during the day, on like the last 48 hours on little volume, when we're going down a bit on an area that had already been wiped by this down spike that we had a couple of days ago, I'm still seeing long liquidations. And then price goes up a little bit, and you get a whole bunch of short liquidations. People are just making stupid bets, assuming that this is the last time the coin is going to move in a particular direction. And if that is what's going on the markets at large, then I'm not surprised that we're getting this completely absurd wipeouts every so often.
Yeah. So what do you think is the path forward from here?
Ideally, we liquidate all these degenerates. That way, price, both sides, both the ones that are longing and shorting, we degenerates get liquidated for a bit, then price can move consistently whatever direction it was going to go, and things seem a little bit more sensible. If this is down for a while, if this is up for a while, I don't particularly care. There's also a factor that someone pointed out, which I hadn't noticed actually. Someone pointed out that we had, like a friend said, that we have had 7 positive months on Bitcoin in a row. I hadn't noticed. I actually had to go back and check, and we have. So it kind of makes sense that people who had been holding since 7 months ago would be dumping some around here, right?
Yeah.
Now, if we look forward a little bit and leaving the price action aside, because that's not kind of like my forte, because this does connect to what I just said. I mentioned earlier that I'm seeing a lot more degeneracy, and I'm not sure if it is. This might just be that I'm paying more attention to the access right now. This might actually go on. It just seems like people are going significantly crazier this time around. It's not just about the liquidations. Yeah, look, it's not just about the liquidations that I'm seeing.
I
Think about.
don't know, man.
Give me a sec. Give me a sec here.
I don't know.
Think about how things were a couple cycles ago. A couple cycles ago, you had a lot of bullshit projects coming out. Like you had things like Ocean that were coming up with this completely made up roadmap and no team to build it with, raising absurd amount of money. But there was a pretense of respectability. There was the pretense that, oh no, I'm putting is this people. They actually build the big chain DB. They can make all this stuff happen, and this investor is involved, right? So there was that pretense that stuff was going to happen. On the last cycle, they seem to have moved to like the NFT projects with an also made up roadmap of, oh, if you if you buy this, we're going to make a game and we're going to make a cartoon and we're going to make all this stuff. And I'm seeing significantly less of that this time around. This time, I'm just seeing like, oh, this dog has 3 hats and that one has a scarf, and people just give him hundreds of millions. Like, no roadmap, no nothing. Like, dog with 3 hats, knock yourself out. It is like the degeneracy is a lot more obvious, right? People are like not even pretending anymore. Tell me, you are not seeing this.
So it depends a little bit on what you mean by degeneracy. If you mean just the sheer volume of like bullshit meme stuff, then yeah, but that always grows every cycle, right? So I'm what I'm thinking about in terms of degeneracy, okay, maybe degeneracy is the wrong word, but one thing that I found really interesting in this cycle is like we hit all-time highs and no one seemed to be talking about it outside of crypto. Like some people have started like texting me like, oh, I saw Bitcoin go up or whatever, but like
Oh, that's
nowhere near what it has been in most bull markets. And I don't actually know what that means. Like you could potentially argue that it's like interest rates are up, people are paying mortgages, nobody cares. This is like it's possible. I suspect it's not true. There's there's definitely a correlation between like disposable income and betting behavior, but I think there is like also this very inbuilt thing in humans where you're just very willing to believe you'll get rich quick, especially if something is proven to be almost like a self-fulfilling prophecy. So we'll see. But that's kind of like where I started out. One thing. So I'm the type of person who I get a bit antsy in bull markets. It's like when it feels euphoric or something, I start feeling weird. I'm like,
yeah.
this something is wrong. And so when the prices take a big drop, I'm like, oof, okay, back on land. I know where we're going. It's all okay. And so I was very much looking forward to this happening. And obviously, like if you look at Bitcoin, like the alts have dropped a little bit more, but Bitcoin has barely dropped. Like this is people who think this is a drop have not been
Oh,
in
yeah.
crypto for longer than like I don't know 3 years. I yeah, like there is a buildup of character that happens the longer you're in crypto, where you start in stocks, if something's drops I don't know 10%, people freak out, and then in crypto it's like, oh, swung another swing of 80, it's fine. um but so that's kind of like one thought I have around this. But I think this kind of correction is necessary. So there's a couple. I always have a bit of a weird way of thinking about these things where I don't try to be like too intellectual about them. I don't know if that makes me dumb or smart. Um, but you can like think about it from the perspective of like productivity or the interest rates and whatever tech stocks are doing and do all this kind of stuff. Or you can just think about it from like a very basic psychology perspective. And I think historically, at least in every cycle that we've seen, um, these drops are in fact necessary for that mania to happen. Now, I don't know if I want that mania to happen, but I do think these are partly the cause, because if you are when you break the news barrier, and that usually happens somewhere around all-time highs. I think it broke surprisingly late this cycle, but now there's stuff in the newspapers that we've started seeing in the past like 2 months. Once you break the news barrier, people get into like they start looking at it, then they look at the price and they're like, oh my god, like this is expensive, right? And I'm using that term very precisely. So they do no further due diligence. Their read is kind of correct in many ways. But they just look at it. It's been going up for a long time. It must be expensive. And then when it comes down like 30%, then it flips. And now it's cheap.
Yeah.
And so forget absolute numbers completely. These things I think matter on a psychological level a lot. Because what I was saying is people are very willing to believe they're going to get rich quickly. You need that sort of like feeling of opportunity that comes from a drop. And of course, people who are in crypto or who are like long-term investors in crypto, we would look at any of these prices as like too expensive to buy. But most of these people did not come in at, whatever, $14 per sol. They're coming in now and they're looking at the highest prices ever recorded.
Yeah.
So yeah.
Well, not on Sol, but on Bitcoin definitely. No,
Yeah,
but
not on Sol.
we're coming at this from different angles, because you're looking at what is likely to make people who are outside the market come in, and what I'm looking is at the behavior of the people who are already currently in crypto. That's where I mean that I'm seeing a lot more degeneracy that I saw on the past couples.
But I think price
Mostly,
action is largely dictated by externals coming in bull markets.
okay, sure.
Or like when I say
Look,
externals, I don't necessarily like the Bitcoin ETF is just like a funnel for money from a certain crowd, and like that sort of like net new money will dictate how the price action goes a lot more than like people trading within crypto, because most crypto people are holding or selling.
oh, I agree. I'm like I said, I'm not even looking at the. That's why I'm not even talking about how the market is going to go price wise. I'm just looking at trends like like I said, the likely decrease on projects with bullshit roadmap, and those people just launching meme coins instead of bothering with the pretense of a roadmap.
But do they affect market
Do they
pricing
what?
at all? Do they affect prices at all?
Oh no, that's what I'm saying. That I don't particularly care about price. I'm not looking at price. I'm just looking
Yeah.
at the
So just like
liquidations as an example
dynamics
of
in the cycle.
I'm looking at the liquidations as an example of the level of degeneracy that we have right now.
Yeah, I mean, Polinaya, however you pronounce it, he wrote this thing about like crypto's moral crisis. And I think I don't know what projects he was referring to, but I think he'd maybe seen like blatantly racist stuff get a lot of support. I don't know, something like that. He got very upset. So on this level of degeneracy, I don't know. Like I'm not numb to it. I I just like I'm not sure what anyone can do about it.
Oh, we don't need to do anything in particular, but I think it's interesting if it actually happens, because why I've been having an eye out on this is because on every industry that I've been in, there's usually, after it starts maturing, you start seeing a polarization, right? So for instance, on gaming, on games, you used to have the AAA games, but then there was all this undefined morass of indie game development, for instance, which could be a couple, 3, maybe 10 people making a game, who knows? But there were things in a variety of budgets, and
Or
the
300 people, but they just call it an indie game.
well, that's a different situation, but yeah, that's still happening. But what usually tends to happen, which when we discussed AI, I mentioned that this was happening as well, is that the middle very quickly disappears. It becomes either one person in a basement doing some stuff on their own with who knows what art that they got from somewhere, or a massive project that, as you mentioned, they call an indie game just because it's not owned by a major
Well,
corporation. But
this is the Arthur Hayes barbell
eh,
strategy, essentially, right?
yeah, but the thing is, and things always end up going that way, right? And I don't think in crypto we had that yet, because we still had the middle of the road of the oceans protocols. We had, which, as I mentioned, the last year in the last cycle, we had NFT projects raising 20, 50 million on a roadmap and then doing nothing, right? And that is what I consider the middle up to a point. And
Okay,
I
so
think that one is the one that is likely to go away fairly quickly.
can
You're
I
gonna have projects that raise 100 mil, or you're gonna have meme coins,
can
basically.
I repeat sort of what I'm hearing just to check that I'm kind of getting how you're thinking about it. So in the beginning, you kind of is like it's all design space, and so you have people trying out all kinds of things, and like some of it makes sense and some of it doesn't, but it's sort of like there's a little bit less of the extremes because maybe because there's that design space. And then as time goes by, you start converging, like as time goes by and the maturity gets a little bit better, doing anything reasonable maybe requires more resources and more expertise. and and then you get this like very serious group, and then you get this like very non-serious group. Is that kind of like what you're saying?
I think that close. What I'm saying is that you are going to get the massively funded projects, and you're going to get the small experimental things. On the serious side, you may still have like the couple people doing a small project kind of thing, or the Andre Cronjes coming up with a project on their own. But I think that the middle of the road on serious people are going to disappear. And the middle of the road on serious people are likely to just go meme coin, because why bother putting up appearances if the Donbass meme coins still get you as much money with less effort?
Fair. I think the meme coins are a little bit of they're a little bit deceptive because they've got huge, like much greater survivorship bias than the serious projects. So there are like literally like there's like a million different meme coins, and like five of them work out. Like
Sure.
these are not real numbers, but like indicative of kind of it's a lottery, right? I don't actually think there's anything wrong with participating in a lottery if that's what you want. I think it's sort of statistically quite dumb, um, but if that's what you want to do, then sure. But like I don't really like what I'm getting at is I think the perception that you can make a lot of money with meme coins is somewhat skewed, because the likelihood that out of the total sample of whatever amount of projects on sort of the serious side versus the meme coin side, the likelihood of success is actually kind of greater on the serious side, partly because there's much less stuff, and partly because um yeah, like it hopefully builds something useful.
I don't think you're thinking about
But are
this
you
in
talking
terms
about
of.
investors or are you talking about builders? Because I think launching a meme coin and having that succeed is actually very, very difficult.
I'm okay. Different things there. First of all, I don't expect that somebody is sitting there trying to figure out, oh, do I launch a network that is also going to be a market for zero knowledge proofs, or do I launch a meme coin? Right. What you're more likely to get as the meme coin builders are the people who are going to be wondering, oh, do I make up a roadmap and launch an NFT collection that I'm going to have to go out and make pretend partnerships with, or do I just launch a meme coin? Both are going to have the same probability of success. One of them requires significantly less work.
Oh, I see. So
That's
you
that's
have
why
kind of
that's why I mean that the unserious builders are likely to just go for the full degenerates.
right, right. Okay, I see what you mean. So you have this kind of um somewhere from the middle you have this sort of gravity towards the extreme because it's so much more low effort.
Exactly.
Um and it's possible that that middle is actually on the full spectrum of serious and non-serious is actually fairly high, or like proportionally there may be more people who are likely to go there than there are people who are likely to go serious projects.
Correct.
Yeah, well, yeah, so I don't really disagree with that. I do question whether that's the kind of thing that resolves itself. Like, this is the other thing that I have, that I sort of broadly think when there's all kinds of stupid stuff, like this comes back to like revealed and hidden preferences. And so if the market at large wants useless shit, then the market will build them useless shit. And there's nothing
I
you can
agree.
do about that, right? Like you can try to have regulators come in and top down dictate what is useless and what is not, but like that doesn't change the basic dynamics.
Well,
It usually just moves like the sort of useless shit that would be legal into a gray area where then you start funding organized crime, which is not great either. And so
look, I
crypto is
agree.
a
I'm not
mirror,
saying
right? Like, what do we really want? And
I'm not
turns out,
saying I'm not saying someone ought to do something about this. What I'm saying is that I do suspect that, let's say that there's going to be significantly less noise on the middle of the market because the unserious builders are just going to go build this stuff. And if you're not interested on Dog with Hat, you just ignore that whole thing. But you're not going to likely to be, oh, I'm going to have to do, if you're actually looking at things to invest in, you're less likely to have to deal with noise projects on the middle of the road because the unserious ones just went a different route. You're still going to want to have to deal with the stuff that people think they can build that doesn't have value or something. But the scammers, like the raw scammers, are likely to just go on and run a scam meme coin. And if that one doesn't work, they run another one, and that's it.
yeah, yeah, um, yeah. I don't. Yeah, I don't know if that market dynamic is necessarily like bad. Um, I like, to be clear, I am very aware that the image of the crypto market is not great. I've been in the market since 2012 and gone through the various periods where everyone thought I was a money launderer or a drug dealer or some combination. Maybe funding North Korea, that was another possibility. Now potentially helping Russia evade sanctions. This is like, but again, like, I think these things eventually work themselves out. Because like over a long enough time period, no one wants to just be losing money. And the percentage of winners and losers in meme coins is not like, it's not great.
I'm actually curious. I don't think I'm going to do this, but I would actually be curious to go in and see the percentage of accounts on something like Drift, where it has high enough volume to be interesting to look at, and all the information is public. The percentage of accounts that actually end up withdrawing a net positive, as opposed to just the ones that did get liquidated, because I would assume that that percentage is also the same for something like a DEX. Again, just considering the numbers of liquidations that I have seen streaming by.
Yeah. Well, going back to the original topic, do you think the bull market is over?
I would expect not, actually. Things are a little bit. First of all, as Teemu said, not investment advice at all. I am by all means not in a writing this thing with absolutely everything I have, like like sell the house, sell the kids, buy in.
Yeah, we're not taking out loans to buy crypto, that's for sure.
Indeed. I would be very surprised if the bull market is over at this stage. We have both discussed our general thesis of the US government is going to want to try and make the economy look good. And considering how bad the Biden administration looks, that now becomes even more important to them.
And they just and they're getting rid of student loans.
Yeah,
Do you know how much excess capital that puts into the economy? Like that's their latest trick, right?
yeah,
So it sounds like they're not putting money into the economy, but they 100% are, because these
yeah.
people would otherwise be paying off their loans. Suddenly they don't need to. They have additional income. They're not buying houses because they're not going to be able to afford houses for 50, maybe 500 years. Um, and so like they're going to do something else with it. It's the same thing. It's an airdrop. It's a
Yeah.
fucking airdrop to academia.
So
It's the funniest
I
thing in the world. Also, what a douchey move to the people who didn't go to university, right? Like,
basically
you end
only
up paying for not spending a huge ton of money on a useless education. You end up paying for other people's education.
not just that, you end up paying for not going into debt for
Yeah.
education.
Yeah, yeah. It
Yeah,
is
this
preposterous.
I
Preposterous.
did I send you or did I just
Like
discuss this with
where
family?
is the basic American sort of ideal of like, you know, chart your path on your own sort of thing? Like if you're gonna go look for gold, there's no guarantee that gold is there. If you bought this bullshit of going to Harvard and then you end up as like, I don't know, some fucking intern at Wall Street Journal, like that, like yes, there's luck involved in every lifetime and every career choice, but like surely it's not like appropriate to retroactively be like, oh, like they thought it would be good. Like, like
Well,
if I start a
devil's
startup,
advocate.
if I start a startup and it fails, I'm not like, oh, I think the government should pay me, because I thought it would work. It was like,
Okay, so the devil's a couple things there. Arguably, in the European Union countries like particularly not countries with a proper social support network, if your startup fails, the government will pay you for a while just to do nothing. Whereas in the States, you would be pretty fucked.
but that's
Um,
different. That's a safety net. I'm on board with safety nets, assuming that the economies of the countries can actually sustain them. I think a
okay,
safety net is good.
but the
Um,
US doesn't even have one. Now, I said devil's advocate. Arguably speaking, the people who are this is a very egalitarian move because the people who are actually benefiting from it were the people who could not afford to pay college. Those who could afford to pay college do not need to benefit extra. So this is one of the most egalitarian airdrops that they have done.
yeah, but like, think about the signaling. So if you now have the choice of going to college and taking out a big loan or not, what do you do? What do you
Oh,
do?
but haven't we discussed how debt oriented the US entire
No,
mentality
no, no.
is?
I'm talking about like a very pragmatic decision. So this generation that got their debts just wiped, they had a fairly good understanding at the time of what that meant, right? When you
Yeah.
take on this debt, then you have to pay it back. It's typically how it goes. The new generation that's now going to go into college needs to try to factor in some probability that the US government is going to
Yeah.
wipe their debt. And so they don't need to, like the previous generation just did some basic math in their head of like, how much do I think I'm going to earn? Can I pay this back? Blah, 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 blah. And then maybe it was completely wrong, but like basic math all the same. And there's a risk tolerance that you can apply to it. This new thing is like, try to understand like macro dynamics and voter dynamics and whether like at some point in the next 20 years, the Democrats are likely to be in such a bad position that they're going to just airdrop a fuck ton of money to everyone. Like, it's insane. Like,
I wasn't even
I
thinking
don't know
about
what
that.
I would do. Like, well, I wouldn't go to college because it's bullshit. But but if I was in the position where I was trying to make that choice as like an 18-year-old, it's really, really difficult.
I wasn't even thinking about that. I'm thinking that the more likely thing is that it's just going to be a situation of moral hazard of, fuck it. They're going to forgive it at some point anyway, because that's the new thing and it gets taken for granted. So people are just going to assume that they're not going to have to pay it. And then they're going to get real mad if they actually have to.
And if that is indeed what happens, then it actually probably works out because there's so much new debt that it has to be forgiven. Like, if there was collusion, the right sort of chess move in the new generation would be to all agree to take out maximum debt, right?
Yeah, like
Um,
everybody defects at once.
exactly, and then they would almost have to do it. And if further generations did that, like, you just, if you could amass enough people to again have that, then it would again potentially be forgiven, and now there's a precedent and whatnot. Um, but
Look,
but because you don't have that collusion and you can't know the consensus among other people, is actually game theoretically very difficult to reason about.
this actually relates to something that I can recall if I had discussed with you. I must have discussed it with somebody a couple of years ago, where I was telling him that I suspect that we are going to end up with more and more Degen societies in general. Like as people get trapped, they feel more trapped into a losing social contract where they can, like, you can't afford a house or even on a loan, or you're stuck on a job that you don't like because of a loan, or this that you need to survive, or this even like the student loans. You're going to start people taking riskier and riskier bets for a chance at a large payout, and that this is going to end up, even if this starts locally, because we're very seeing that, for instance, in countries like South Korea, a lot of people tend to who lost money by buying into crypto tops. They were saying that they saw it as the only chance to actually, afford this apartment, just have a chance. Anyway, this was going to start locally, but would end up altering the social makeup as a whole. And something like this, which just encourages people to, like, fuck it, I'm going to take college as a bet, and then I see if I have to pay the loan or not. This is likely going to be one of those things.
Well, actually, I just realized what the optimal strategy is. It's to somehow get a student loan, but not to go to college.
I don't know how those work. I thought that they mostly pay the massive tuition rates for you instead of giving you the money to pay the right tuition.
Exactly. I don't think it works in practice, but if you could do that, I think that would probably be optimal. If you could get, whatever cost of college is probably between like 50 and 150K, something like that in the US for the top colleges. If you can get that money in hand now as a loan and then not
Yeah.
go or pay it to anyone, but still be sort of included in the statistics and the numbers of student debt, then like I think that's optimal potentially.
I'm seeing it's increasing degeneracy everywhere.
Yeah. Okay. I need to go. Thank you for this. Thank you to all 1.3 million of you who are listening. And
Wait,
we'll
have
see
you
you
gone
next
down?
time. Huh?
I thought we were like at 4.
4. Oh, 4 million. Right. Yeah.
Yeah.
I thought you said 4 people. I was like, no, 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 no. No, it's a globally important show that you all are listening to.
Yeah, you need
Um,
to remember to check the Apple Gold subscriber numbers.
yeah, yeah. Um, anyway, everybody have a good week and see you next time.
Ciao.